Here to talk markets and tax reform is Glenn Youngkin. He is the Chief Operating Officer and President of the Carlyle Group, one of the world's largest private equity firms with $170 billion in assets under management. And we are happy you are here today. Welcome.
Thank you, Maria. Great to be here.
Thank you so much for joining us. First, let's talk policy and the markets in general. How do you allocate capital today in an environment where we're not sure what's happening? We didn't get health care done. We're waiting on tax reform. How do you see things?
Yeah, I think not getting things done is slightly different than actually having a negative bias coming out of Washington. So had we been sitting here 1 year ago, we would have expected Hillary Clinton to win the presidency, and we were actually expecting a recession in the not-so-near future. And it had everything to do with just the trajectory of things and the confidence of corporate America and really the trajectory of global business. And then all of a sudden, 1 year later, we have a very different picture. The economies around the world are in really good shape. We have, for the first time in over 10 years, synchronized growth around the world, where all the major economies, except for the UK, are actually growing. Now, they're not overheating. They're just growing. And that's a very different environment. So what do we see out of Washington? We do see gridlock. I mean, it's every day.
Yeah.
But it's an interesting other side of the coin. We used to sit in business and think, well, unfortunately, what's going to come out of Washington is going to actually penalize business in this country. And now we're hopeful that what comes out of Washington will actually help it. And that will help the economy. You know, everybody likes to think that we're in this year 7 or 8 of this recovery. And I think they mistakenly think that economic recoveries die of old age. What they die of is overheating. And we're not overheating, but with some good policy moves out of Washington, we can actually sustain this for a long time.
So you see a pretty good backdrop in terms of earnings, in terms of revenue growth, and a tax policy actually lifting more boats if, in fact, it materializes.
Maria, the reality is where right after the election, there was the so-called Trump bump, and the markets ran in expectation of stronger corporate performance. Well, what happened, and it was really seen in the second quarter, particularly S&P 500 earnings are up 7% in the quarter year over year. And so all of a sudden, we're seeing the kind of growth out of corporate America at the revenue line and the earnings line that underpins this confidence. So it's just a very different economic situation than we were in just 1 year ago.
I want to ask you what kind of a tax package would really move the needle. Now, Carlyle invests in companies with what kind of market cap? Because I think the smaller and mid-cap companies are really going to see a boost if we were to see that pass-through rate at 15 or 20%. I mean, the larger companies less so, but smaller and mid-cap companies are going to see a movement. And I would love to know your thoughts in terms of tweaking this tax bill, what the impact is. Let's hear from Ted Cruz. I spoke with Ted Cruz, the senator, on Mornings with Maria this past week, on his vision for tax reform. He has a plan. He's looking for a flat tax. Here's what he said about the flat tax.
A single flat tax that's fair and uniform for everyone is a big standard deduction, and then everyone pays the same simple rate, because I think there's power in bold simplicity. I think going to the postcard has power just because it's small. It means Congress can't go and stick a whole bunch of extra garbage on it. It means you have a lot more time in your life, a lot more money in your life to take care of your needs.
So one key that they're talking about is the so-called expensing option.
Yes.
Ted Cruz wants that expensing option in a tax bill, meaning if a company goes out and buys a lot of equipment, the money goes out the door immediately, they should expense it immediately rather than having it depreciate over years. Your take on who gets impacted by a tax plan?
Well, so first of all, I do think that what Senator Cruz is talking about from a flat tax is for personal income tax. And I do think that that is part of just a general theme of simplifying things.
Right.
And that same theme for personal income tax translates to what they're trying to get done in the corporate world. And so I think the principles that all of they call them the big six are getting together to talk about are around simplifying things. And that is critical to business. Can you please just make it more straightforward? I have to say, while I love the tax accounting and tax legal community. If we spent less time trying to, in fact, file and make sure that we were complying with this myriad of tax regulations, it would sure make things a lot more efficient. Now, you asked about small and medium-sized businesses.
Yeah.
Interestingly, at Carlyle, while we manage $170 billion and everybody thinks that we do these giant investments, in fact, in the second quarter, out of all the investments we made, we only did 3 that were more than $300 million.
Yeah, that's why I asked you this question. You really have an insight on this.
We actually live in the middle market, and and globally we live in the middle market in the United States and around the world. And the ability to, in fact, have higher cash flows net to the bottom line that companies can then reinvest in product expansions and new facility construction, hiring more people, it will be meaningful.